following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Man, these central bankers, Philly Fed guy, we're going to act now. Big tug of war with the Fed right now. So let's take a look at the 10-year. And as we've talked about, this is something we want to focus on a little bit here. The Treasury market is usually right. So as we look at this, we look at the June contract. It is what it is. These are the bids and the offers. This is where the market has said, hey, this is where the price of the 10-year should be. And technically speaking, and we're going to look at the 30-year too. Technically speaking, we're much higher than when all these latest statements have come out that, hey, we're going to raise rates. So again, we've talked about this, and I'm looking at this as a bullish sign for treasuries, actually. I mean, I don't know if you can look at it any other way, actually. So here's a very thin profile here around 130 down into 129.15. Nothing to write home about here. I'm actually buying breakouts, buying support and buying breakouts here. So what am I doing? I'm buying 129.15, 16. I'm buying above 130.01. Don't really have any leverage right now, but kind of amazing. You know, if you listen to Tom, I think he's probably said this a couple of times too. You know, the Treasury market, we've looked at this as somewhat the easier trade than trying to trade the S&Ps lately. And a lot of times, I've heard Tom say this, a lot of times those guys that are trading the treasuries are usually right. I mean, Rick Santelli, you listen to him, he's a little, always in disbelief sometimes, I guess, what the Fed's actually supposed to do and what they're actually doing. But, these notes are hanging in there for a reason. I mean, otherwise they'd have imploded below 129. And you got to look at that as, what's the easier trade out there? The S&Ps have been a little bit of a mixed bag lately, and we've talked about catching a bid on the 10-year for a while and continuing to stay in that mode. Let's take a look at the 30-year also. Here's the long-term on the 30-year. Kind of amazing, actually. Don't have a lot of profiles because there wasn't a lot of action in the June contract, and we're going to stick with as we've talked about, trying to use these continuous contracts. We're just going to stick with the front month here for our profiles. You got support on a weekly at 164.02, if you can see that. Pretty wide profile when it comes to the 30-year. Targets up top, 165.30. Let's just call it 166. Here's the daily, but remember that POC on the weekly is pretty strong, and I kind of like how this thing is continuing to crowd up into 164.30, 165. So again, where's the target up top? 166 right now. And you've got a stop situation below 164 on the 30-year. We're going to look at the, let's just put this in the right month here. Sorry about that. We're going to look at the Bund, and here's the situation on the Bund. Again, coming up into these inflection points, you want to see these things get away from the unfair highs. 164.22 on the Bund, any breakouts above there, and you've got support around 163.19 into 163.46. Here's the daily. These treasuries are not getting scared off here. A little bit of a, I guess, bullish news on the Bund coming out of Europe, out of Germany, which, inversely means rates are coming off there. But, again, I mean, I'm actually kind of shocked that the 10 years hanging in here like this. So again, I think the market, the Treasury market, that is not really going along with the latest rhetoric. Let's take a look at gold. I actually bought some gold down here. Why? Because we are still in go-go mode on the long-term weekly. No new profiles attempting to appear there. No yellow bars. Nothing in the scanner. Let me just pull up the scanner. And let's go to our futures section. And let's see that gold here, similar situation as yesterday when we were talking. But, the reason I think it's, and I'm sorry, John from Philadelphia, I'm snapping around like a madman this morning. The reason I like this is because, Tom and I were talking. I'm going to be on his show today. We'll probably talk about gold. This collection area down here, 138 to 140, or excuse me, 1238 to 1242, a little bit of a collection area. The good news is on this one, you can play defense below 1238. And I personally actually bought some gold this morning. Maybe wrong, but that's okay. All right, so S&Ps, we're going to take a look at those really quick. Let's take a look at the dollar first. All right, so as we look at this, dollar crowding, 95.65. Talked about the possibility of this thing going farther north. And it looks to me, and we've looked at this chart, at this consolidation around these unfair highs on the weekly, it looks to me that we could make another leg up. And we talked about not shorting against that area, just an area to take some weight off on the launch that happened above 94.12 on the dollar. Now it looks like we may have, a chance to have it a daily close and possibly a weekly close above that 90. What was that number on the weekly? 95.65. These are all in the scanner. So pay attention to this. Don't know if the market's going to like that. The S&Ps this morning, man, again, we've talked about that volatility play. We've had some, these analysts come out super bullish. I think we talked about 2350. Some guy was talking about the other day. And then you've got, I think this guy on CNBC right now, I can't remember his name. Maybe somebody can say that. But, markets have gone sideways. You don't want to see that. And taking a bearish tone. So, again, fundamental news out there. I don't think you can trade off of it for the most part. Obviously, impacting events from Fed announcements and things like that, you've got to pay attention to those. But the technical analysis on this, it is what it is. This is where the market's supposed to be right now. And you're coming up into this 2056 on a POC on a relatively wide profile. I don't think you have any leverage here, folks. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Somebody made a little comment that gold's not going to like a stronger dollar. I think we've got just a trading opportunity on gold here. Actually, wow. This wasn't happening before. We got a new profile attempting to appear on the dollar now. Let's take a look at the gold situation. That's going to be showing up in the scanner in just a second here. So, I'm sorry. God, where am I doing here? Dollar, sorry. So you've got a yellow, scanner's not working right. Huh? Yeah, but it is. Here's the yellow peel back happening in the dollar daily right now, along with that weekly. That's a little bit worse news than, waiting for the pop out now. I think you've got to really wait now. Some really decent targets showing that they may have been met on the dollar. Even though we've got that crowding action, that's not very good right now. We've got a new supply area trying to happen on the dollar on the daily, so that makes me feel a little bit better about this gold bounce possibility here. Don't get married to it. I got stops in below 1238, based on my appetite for risk on a little bit of a gold pop here. This is for day trading situations. I think if you're looking to be long gold, I'm going to pull this up again. And again, anything can happen here. We've had a decent pullback from above 1,300, and I'm not focused on trend lines or anything like that. I'm focused on where we think the balance and imbalance areas are, and right now we're at the bottom of a relatively thin profile on the daily, and we're at a kind of a Custer's last stance here, and we may get a little bit of a trading opportunity on the long side now. John from Philadelphia. Yeah. You know what's wild? In Rojas City, on the north end of Iloilo, the island, which is kind of north of where I have an office in Negros Occidental, in Bacolod City, Apple and Google, they have kind of got this tract of land. They're putting up a facility, and Apple and Google are moving in there, like wholeheartedly, not contracting work. They're actually getting out of China. And this is probably going to be up and running summer of 2017. That's Philippine time, so that usually means winter of 2019. So they're getting out of China. He was saying something in the den about, the Chinese guy that was, I think I embarrassed, and that ended up kind of a mess in front of a lot of people. But he was asking for my formula. So Apple is trying to stage out of that country right now. And the Philippines, I think it's the second largest English speaking nation in the world. It's a decent situation there. It's an up and coming country. And Apple's starting to really look hard into there, obviously, and trying to put some stakes in the ground. So on that note, we got to look at Apple. Talked about this situation, new profile. It happened yesterday after the show. We were eSignal has their daily and weekly profiles change based on new weekly and daily bars printing. We didn't see this yesterday. We talked about a higher level to sell Apple that would hopefully coincide with some other things we were looking at. Right now, 98.64 is that unfair high on the weekly. We're trading, looks like pre-market, around 97.07. So the good news is you've got a daily profile top that's around 99.44. You got the weekly now 98.64. So you've got about a 75-cent range there, which is kind of a nice area. And again, I tried this around 93.81, but then when we had, when we break above those areas, it's not okay to be short anymore yet. All right, so we're waiting for, again, either resistance or breakdown. It's really that simple. It kind of makes it black and white for me, which I need black and white. 98.64 into 99.44. So that's going to be, if we get any rallies in this, I think that's going to be your kind of collection area on the short side. And right now, you just don't have any leverage. If Apple starts falling apart again, you miss the trade and you didn't lose any money. That's the way I look at these things. So here's the daily. I'm probably moving the charts too fast again. Here's the weekly. So I'm going to go into the scanner, and I'm going to go over here to my dashboard, and I'm going to look at Apple. And there's that 98.64. There's a 99.44. Here's the landscape view. And, nobody really talks about the landscape view in the scanner a lot, except me. I like this a lot. This is, I thought I'd just done something outstanding. The level of the market where you can see it relative to all the profiles, and you can kind of get a quick idea where these areas are of significance, where you can pick the battles, and when they line up, and in this case, if Apple gets up into that area, you're going to see more than likely top here, which means we're in the vicinity of those inflection points. But right now, as you can see, we just don't have any leverage here, and I'd like to trade off longer term inflection points. So that's the drill. I want to go into the utilities, my favorite sector here. We're going to look at the daily, and there's the utilities. Wow, in the cellar. Some folks getting scared here, but I want to pull up the XLU in general. We talked about some stocks that are showing themselves to be strong here, but we're going to go into this XLU sector, keeping in mind what we said about the 10-year. Here's where we're at on the long-term weekly. And again, the scanner puts all this right in perspective for you. We had a profile yesterday up here above price action. That is bearish in general, right? But if you look at on the intermediate, but if you look at the long term, pretty wide profile, got up to the top of the mountain, didn't want to roll up the other side. We're rolling down. So right now, we could have a little bit more downside on the XLU. And, yesterday we talked about, the possibility of this holding 47.99, let's just call it 48. That didn't work out. You may be wanting to sit on the sidelines here a little bit based on this and that weekly POC. I personally think the 10-year, as I've said before, is going to probably. I'm shocked that it's holding in there, which is, wow. There's no free trades out there. It doesn't just give you this opportunity. Oh God, they're going to raise rates, and I'm going to be able to short the 10-year, and get the cheerleader at the end of the movie. It doesn't work out like that. That thing is up there for a reason. I'm still looking at the XLU as a buy opportunity at some point. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. So gold is at the pressure point here, right at the unfair lows here, around 1238.8. Gold's trading 1238.3 right now. So we are at the inflection point to pay attention to. Nothing real dangerous here happening on the weekly yet. And when gold gets moving, make sure you put your stops in if you're playing that game. All right. So we're talking about the XLU. Finished with that. XLF, again, just kind of churning here. Came off of these unfair highs around the daily yesterday, 23.34, backed off. Don't see the leverage here at all. I don't see the S&Ps really having a chance to follow through that well. We've already talked about that. We're up about 12 points this morning. But again, smack dab in the middle of a daily, basically smack dab in the middle of a weekly. We're going to look at the internals as they closed yesterday. If I can get this up here. Breadth just really, really mixed up. Nothing big on the weekly, on the positive section, on the TAS profile breadth net calculations daily. Just a complete mixed bag. We were talking yesterday for a while about a non-directional play, buy volatility. I'm still in that camp. Let's take a look at what's been breaking out lately in the S&Ps. See, there's 4 stocks. PNR. You want to find some strong stocks? Here's one that's breaking out again. Genworth Financial on the weekly. Let's just take a look at this one. And why is this? Because we've got a new profile appearing below price action. This is obviously a financial XLF stock. Profile appearing below price action. Here's your daily. It's not a bad little, if you're going to put a gun to my head and force me to buy a financial stock, not a bad little play. The good news is this is a cheap stock. You can play defense on it based around those profiles. DuPont, an XLB stock. Here's the daily. Here's the weekly. Got a chance to play defense here, which is what I look at always first. Outperforming the market lately, of course. Here's Gap. I have to laugh. But, the cool thing is, I want to blow this up really quick. Let's actually go back to eSignal and look at Gap. So what I did is I basically just kind of looked at breakout situations, GPS. We talked about this the other day, actually. And we said, hey, you know what? You don't have a chance to really play defense down here anywhere, but on the daily now, guess what? Let's take a look at this. From 30, basically got cut in half. So now, yesterday, we got above 1806. Now you've got a chance to play defense here. And if you want to look at this as ultra defense here, if 1727 stops below there, you've got a collection area here now. But I like this on a possible bounce. You've got a hole in the marketplace, a massive hole, up to about 22. And on the weekly, if we have some kind of new profile attempt to appear, you might have some new stronger inflection points to pay attention to as far as targets go. Did I say target? But as we look at this, and I want to just kind of review this here. Let me blow this up a little bit. When we have that yellow bar, okay, and that's in the scanner as a yellow peel back, it's time to take some weight off. That doesn't mean to say it's time to turn around. But as you can see, a lot of times these things explore the entire fair auction when that new profile outputs. And obviously, you had a gift on Friday with this thing. And we were looking at this for, hey, it's not time, it's not time, it's not time. We want to see some indications. You opened up, you went back and retested this 1727 on the bottom of the profile. We reached 1731. And we ramped up all the way into 1806 pretty quickly. Yesterday, we have broken out of this profile. So now you're looking for retracements down in 1806. If you weren't looking at this, as if it wasn't on our radar, on your radar screen, on the custom portfolio that you can build in the scanner. If I want to put something like GPS in a custom portfolio, I want to go in here and edit lists. I'm just going to choose this John Test one. Come in here, G or Gap. Let's just do that. There it is, and it puts it in here. I can save it. I can move it around. If I do that, boom, it's at the top. And as we say in North Carolina, viola. And here we go. John Test. And there it is at the top. So it's a little clunky to kind of move these around. I'd like the drag and drop feature is going to be on the HTML5 version for this. So, and the alerts are coming. Joe from Scotland, that the boys are working on it. So we're trying to continually put more things in the scanner that'll hopefully cut down time of research and flipping around and things like that. That's the whole premise of this thing, is to find opportunities. So let's take a look at some breakdowns. We looked at breakouts, obviously more breakdowns. This is an indicator in itself, in my opinion. Let's look at Cigna. Okay, so here's the daily. Here's the weekly. Scary little situation here. 128.54 can play defense around there. We've clean and cleared below daily and weekly profiles. Wow, this is an ugly, ugly situation. H&R Block. I guess I wasn't the only one who didn't go into their office and file taxes this year. Flat tax. Let's do it. That's a millennial desire, you know. I mean, think about it. You know, ease of everything. Here we go. So here's the daily, getting below. Man, this is ugly. Jesus. Ooh. And that profile appearing above price action like that on the weekly yesterday is not cool. Man, I haven't even seen that. Ouch. Union Pacific, let's take a look at this one. Here's the daily breaking down again. Don't have a lot of targets on this one, much lower, 78.55. Probably not, yeah. Might have another 5 or 6 points on the downside on this before you get into something that, you know, you're going to have to kind of sit tight on. These unfurloughed 78.55. Let me see here. Let me look at the DEN really quick. Okay, here we go. All right, so let's go back to the dashboard really quick, and we're going to go to break in about 10 seconds here. We're going to do a couple little sorts here in the custom, in the manual filters, and we're going to take a look and see what comes out the other end when we come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. So what we're doing here is manual sort. What's trading below profiles on the weekly and sitting at the bottom of the daily. What I really wanted to do was do this sort below profiles on the weekly that had rallied up to the top of that profile on the daily. But we don't have anything meeting that criteria, which is awful. So what we're going to do is just look at below and bottom. These are ones that are looking decrepit. So we're going to look at, I don't know if the market's going to give us a lot of help today. We're up, what are we up on the S&Ps right now? 11 and a half. Getting up into that POC on the daily, poking our head above. I don't have a lot of confidence in this right now. Very choppy market. Here's the sort that I just did. Let's take a look at Microsoft really quick. We're going to look at Starbucks too. Microsoft. Okay, so here's the daily. This is where we're at. Where are we at pre-market here? Let's see. We can't give prices in here. Let me. I'm sorry, I'm flipping around, guys. Let me pull up Microsoft to see where we're at pre-market here. Boom. Approximately pre-market. So let's see. 50.52. All right. All right. So it's about a half point off the daily for lows, and the weekly for lows are about the same situation. So what's showing here on Microsoft is bottom. So even though I was looking for stocks that were, I could look at this and change this to bottom, and Microsoft's still going to be in there, obviously. These are stocks that are at a little bit of a precipice here, Microsoft being one of them. So what do you do with this? It's not a situation, obviously the market's choppy. We've kind of come down into support on the daily and the weekly. You've got a little bit of a trading opportunity here, but any closes below these areas might be some technical damage that you can take advantage of on the short side. So again, I've left the door open to not be wrong here. So let me try to make sense of it. As we look at Microsoft, you have a trading opportunity here as a bounce, but and the weird thing is, when we try to find opportunities, anomalies that are going on relative to market action, we want the market to kind of have these moves one way or the other, so it kind of clears the air so we can find opportunities. Right now, we've got a choppy market. Therefore, you may have some choppiness in some stocks, so you may have a chance to catch a little bit of a bid here on Microsoft. Now, if the market had been running straight up and we had this type of scenario, I would start licking my lips as, wow, I want to start selling breakdowns below this 50.09 coupled with 50.04. But right now, choppiness, stocks may kind of be range bound a little bit here, and you may have a chance to catch Microsoft on some support. Does that make sense? No? Yes? All right, so let's go back to this one. And we're going to look at Starbucks. Let's pull Starbucks up in, daggone it. Let's pull Starbucks up here. I still haven't figured out how people pay $4 or $5 for a cup of coffee when you can buy a pound of coffee. That's really decent for about the same price. Crazy. All right, so here's S-Bucks here, new profile, sitting at this 54.51. Pre-market looks like we're trading around 55. So if you're looking at this, here's the weekly. You've got a new profile on the daily. We may have some retracement action, possibly back up into 56, 51. I think you've got better stocks to buy long-term out there, but you may have a little bit of a trading opportunity here. And, the lofty aspirations on this are going to be 56 and a half, 56.11 into 57, 57 and a half. Not a lot of bang for your buck there, but at least you can play defense below 54.51. All right, let's get back to the scanner for a second. All right, so General Electric. Let's take a look at General Electric. All right, so was showing 29.86, big inflection point there. Again, market's kind of choppy. I'm sorry, daggone it. 29.86 on the weekly, 29.54 on the daily. Getting back above there, getting a close above those areas might be a situation where you can buy this up into you know, 31.68 is the top of the profile on the weekly. This is obviously dividend, long-term play, situations like that. But again, you don't have a lot of risk on this trade if you can get back above this 29.54 area, possibly move up to that 31.68 area on GE. Just something to take a look at. Again, the market's just chopping around here. Let's relook at gold. Sitting right, if you're joining the show late, sitting right on these lows here, the daily unfair lows, not wanting to bounce off of it. Usually when you get down to these areas, you want to see it get away from these areas. It's just kind of sitting here. I'm a little concerned about that. But again, the long-term view on gold is still bullish in my opinion. Isn't it funny? Let's go down to crude really quick. Goldman Sachs came in. We talked about that. They got bullish finally. Crude's moving up this morning. 48.97 current lid on it. Long-term, weekly. Don't have anything really mitigating the long-term trade. But again, I think the risk is to be long this particular product, even though we're rallying up this morning. I'm not really looking to buy support on this yet. But if we get another close above 48.97, that's going to change the tone of this a little bit, and we'll be looking at 48.97.49 as somewhat support on it. Right now, I just think we've gone a long ways here, folks, and I would consider a pullback in order here. And this so-called pullback that we had into those unfair highs on the last profile, even though we're edging up, scaling up on profiles here. Technically speaking, there's no real damage here, but I feel like we could at least explore the fair auction down into 46.01 on the current profile. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Just a little review. Got about 4 minutes left. 10-year. Got some support, intermediate support around 129.15, 16. Incredible how this thing's holding up. Custer's last stance, 129.02 on the 10-year. Going to take a look at the DAX really quick. Had talked about waiting for this thing to get below 97.98. That didn't happen. Get a close below there. Had a significant bounce off of 97.98. This morning, or excuse me, this day in Europe, and the DAX continues to climb. Here is the, the big inflection points we thought we would reach around 96.82, getting below 97.98. That didn't happen. We didn't have a weekly close below there. That was going to be the telltale sign where we're going to probably drift lower here. We bounced off of this 97.98 today. Let's go into Asia really quick. Shanghai, just languishing. U.S. markets not getting any big scares from over there right now. We're going to take a look at a couple of currencies really quick. I can get the currency server going here. Here we go. Japanese yen. We did reach those targets as we had talked about religiously, 110.40. We backed off a little bit. Talked about not shorting against this. We want to wait for a daily or weekly close, daily close above 110.40. Here's the daily. You got support now 108.46 on this, in my opinion. It's kind of a wait and see on the yen. Aussie dollar. We talked about this was kind of the not okay to be long anymore for a while when we got below that 74.81 area on the weekly. I tried to buy support there, didn't work out. Here's the situation on the Canadian dollar. This is again, we talked about this not boding well for crude, possibly being a little bit of an leading indicator. Getting above 129.60 here. This is our weekly. Big time targets 133.107 now on the Canadian dollar. Talked about, the devaluation. This is not what you want to see trading crude oil right now. We're going to look at the euro really quick. 112.05, that intermediate support gone now. And then we talked about the big time support on the dollar, on the euro, being around 111.43. We are at today low 111.57, so getting really close to that for a little bit of a trading opportunity on long-term inflection points. And the dollar is again around that weekly unfair high now, so may have a little bit of reversal action on those two products. We're going to look at the ruble. Here's the situation there. A little bit of a lid, 68. Not exactly acting that well relative to crude either. I think I'll be on Tom's show today, Wednesday afternoon as usual. The lowest ratings of the week because I'm on. Just kidding. Looking forward to that. Tom, I will see you this afternoon. Thanks, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.